Hi guys, this is David the Spread Doctor bringing you my journal for Friday the 2nd of October. As you can see from the heat map, it was a mixed picture in the markets today, with the technology sector faring the worst. The Nasdaq was down by over 2%, while the Dow and the S&P were down by less than 1%, and the Russell 2000 managed to close higher. Now, there were two main headlines driving the market today. The first one, which I'm sure everyone knows about, is POTUS testing positive. And the second one is the job numbers. So the street was expecting about 1 million jobs to be created for September or in the month of September. But the numbers came out at 660,000 jobs created, which was disappointing, but handled quite reasonably well by the markets. Given the two negative headlines, the Russell still managed to close up. S&P and Dow closed just less than 1%, I think about half a percentage point. The most interesting thing I found about today's trading session is that in spite of the negative headlines, or the chaos if you like, there was some bargain hunting going on. It appears that some professionals or money managers were buying some stocks on their shopping list on the dip. They were passively buying them, not aggressively, just passively buying on the dip. And this notion of passive buying is supported by the internals on the NYSE, on the New York Stock Exchange. So if you look at the market breadth for today, it shows a ratio of 2-to-1 of advancing to declining stocks. So although the indices paint a mixed picture with a lot of red on the heat map, if you dig deeper and go under the hood, you will find that for every stock that declined, there were two stocks that closed higher. And if you add to that picture the performance of the VIX, given the two headlines, the President of the United States confirming positive for COVID and the number of jobs created falling short of what the street was expecting by some distance, there was no mad panic to go and buy downside protection. In spite of all the negative headlines, the VIX was up by only 0.93, which is not exactly painting a picture of a panic-stricken market. But then a lot of volatility was already baked into the VIX prior to the breaking headlines today. And the VIX closed today at 27.63. On Wednesday was at 26.17. On Monday was at 26.19. So not a massive jump from Wednesday to today, although it did move up a little bit. That said, there are now 14 days until the October contract expires, and there are 49 days until the November contract expires. And that means the window of opportunity for me to sell spreads in November contract will soon be open. I had no new trade ideas today, and I'm going to jump onto my open positions. I now have only just one open position in the October contract. I have one synthetic position which I never got filled on. So for the month of October, I had a position in BABA, which has been closed, and I took my profits. I had a position in SE, that's also closed, taking my profits. I still have an open position in PDD, and in this one I sold a 75.70 put spread. And let's see where PDD closed today. So PDD closed at 71.4 today. My short 75 put is now in the money, and the negative P&L I had from last week has grown a little bit bigger. I'm going to go to my portfolio tab So my negative P&L currently is minus $126 per contract. I got 3 contracts, so that's why that is showing there. So PDD sold off today with the rest of the tech sector, and for the first time since this position was opened on the 8th of September, PDD has now broken below the 72 handle, broken below and closed below it, and that is not encouraging news, because previously the 72 level had seen buyers come in and bid up the stock whenever the market dipped below 72. That didn't happen today. But that said, the 10-day moving average volume for PDD is around 7.1 million. The volume traded today was 5.6 million. So although the stock sold off today with the rest of the tech sector, there was no heavy selling of the stock. It sold at below the 10-day average volume. And that means that the buyers didn't step in to buy the stock that was an offer, not that it was being sold heavily. So as I mentioned last week, I am not looking to adjust this position with a call spread because the premium in the strikes I would like to sell are pretty low and not worth taking that risk or boxing myself in. And we still have 2 weeks left until expiry, and a lot can happen in 2 weeks. So I'm going to sit tight on this one and do nothing. One other thing worth mentioning, given that it's in the money, my short strike, is the risk of assignment. The risk of assignment at this stage is pretty low. One, because there are 2 weeks left, and no one in the right frame of mind would exercise with 2 weeks to go. And I emphasize the right frame of mind. There could be some rookie traders who would decide to exercise it. Secondly, the 75 put, which I am short, has quite significant extrinsic value left in it, and this would be lost if the option was exercised. So if I go to the trade tab, so PD75 strike is selling at $5.20. The stock is currently $71.40. Intrinsic value would be around $3.60. That is the intrinsic value of the 75 puts. Anything over that is the extrinsic value or time value, and that comes in around $1.60. If I do this, so 75 put trading at 520. The stock is 71.40. The intrinsic value is 360. Deduct 520. I take that back. 75 put. Deduct the current share price, which is 71.40, from the 75, which is the short put, and you get 360, which is the intrinsic value or the real value of my 75 put. But it's trading at 520. The difference between the 360 and the 520 is 160, and that is the time value. Now if you were to exercise this 75 put, you'd lose this 160, which is 160 per contract. So it would make more sense for anyone who bought this 75 put to sell it rather than exercise it at this point. Going into expiry week, a few days to expire, this extrinsic value would be close to zero because there'll be no time left in it. So that's the second reason why, all things being equal, the assignment risk is pretty low. But that does not mean some rookie trader couldn't get trigger happy and decide against economic logic and go ahead and exercise his or her right to, exercise the option. So that's that one. Going on to the second, which is a synthetic position, Facebook. The Facebook position is selling the 275 270 put spread. Let's see where Facebook closed. So Facebook closed at 259.94. It was down some 2.5% today, and it also fell along with the rest of the tech sector. Again, a similar scenario to the PDD position in terms of volume. The sell-off today in Facebook was on below average volume. The 10-day average volume for Facebook is around 21.5 million shares. Only 15 million shares were traded today. I say only, but it's not only. 15 million shares were traded in comparison to the average over the last 10 days of 21.5 million. The other good news for this position is that the swing low of around 244 from last week was not revisited this week. So the market made a low, moved up, kind of consolidating around this level. And with earnings around the corner, I think earnings early November, I still fancy the chances of this spread making up ground over the next 2 weeks. So anyone who is holding the spread, sit tight for now. I would not be looking to make an adjustment. And that takes me on to my watch list. My watch list today is identical to what it was on Monday. Compared to Wednesday, SLV silver has dropped off and PDD has gone back in. So I have got UNG, AMZN, SPOT, ZM and PDD on my watch list. They all have high implied volatility, and that's why they made it onto my list. And that brings me to the end of the journal for this week. Before I go, the main highlight of today's journal is what I perceive as a misalignment of the market internals and the headline indices close numbers in today's trading session, and the implication of what that could mean for next week. It could mean the passive buying would push the market higher next week, or it could mean something else. Anyway, have a great weekend, everyone, and stay safe out there. It has now been officially proven that COVID-19 is not a hoax. So have a great weekend and stay safe.